Good morning. You're watching The Market right here in 18 Hour with me, Aisha Faridi, Aman Dabash, Nikunj Dalmia as well in the studios. I call you Nikunj Jain from Anisha Jain.
Do you know Nikunj Jain?
Well,
It's been so many years and the muscle
I know.
memory is not working now.
I was shocked with my tongue.
In my dream also I can say Aisha Faridi now.
But yeah, shocked a little bit that the market as well.
I'm also shocked.
The index managed to make it to 18K yesterday, and guess what? We're only 5% actually high away from the 52-week highs. So at an index level, we're doing quite okay. Of course, yesterday it was Reliance all the way, all guns blazing, or for that matter, the month-to-date performance that one has seen from HDFC Bank. We closed above the 18K mark, and FIIs have been buyers for a fourth consecutive sessions. And exactly what we were talking about yesterday. A couple of these large caps do the trick, and we could get back to the all-time peak.
Yeah, I mean, are we at the turn now? Are we really at the turn in terms of the index wanting to break out? And is the stage set now for markets to take that leap forward? Let's put things in context here. We are 5% away from an 52-week high. We are above 18,000 on the index, and foreign institutional investors have turned net sellers. Incrementally, there is no calendar event. Budget is behind us. Earnings season is over. Globally also, things are under check, whether it is the US 10-year paper or the bond yield. So if genuinely foreign institutional investors, after a genuinely long winter, if they are back, will that do the trick for the markets? I would say that there is a merit in assuming that Nifty this time wants to make a serious attempt towards breaking out of the range, because it is getting support from some of the heavyweights, which in a sense has been the lacking factor. And if you get a combination of banks and a stock like Reliance, if they're on the same side of the trade and the positioning of the market is so light that this time little bit of flows can take the market higher much more. Last time when the markets were at same level, the market positioning was drastically different and everybody was anticipating a breakout trade. This time around, the positioning of the market is very light, so little bit of flows, a bout of short covering and a push from major indices could really take the markets to an all-time high. So the strategy should be very simple. Don't be short in this market. It makes sense to stay with heavyweights, especially FI dominated stocks. And while it's too early to say that whether the attempt towards 18,000 this time will fructify or not, but there is merit in assuming that this time around the positioning of the market is so light that you may just see the market breaking that glass ceiling.
Yeah, and we've got all the ingredients, as you said, put in place in terms of what could really lead us to that point. A quick roundup of the global markets. It's been a fairly decent close on Wall Street, nothing to really shout home about. But of course, you do have the stocks closing slightly higher in the regular trading session. Then you also had stronger than expected January retail sales report coming in. The Asian markets pretty much across the board off to a good start. You had Japan's record trade deficit of 3.5 trillion yen, and that is being digested by investors. Pretty quiet start to the SGX Nifty. So Nikunj, given that you're talking about that serious attempt to break out, that's all when it comes to the frontliners, with a lot of the heavyweights doing the heavy lifting. Yep. But what about the broader markets? Is that going to stay behind in this pullback rally?
No, I think today and tomorrow attention would be around Bank Nifty, and whether the heavyweights do the trick for the market. So frankly, that really becomes the point at which the market attention would be centered. And if you break out of the range, which in a sense has really dodged us for a long period of time, let's look at the 6-month chart of the Nifty, and you will actually see that how the market has just been crawling its way up and down, gradually crawling its way up and down. And once that breakout is established, I guess energy levels and interest in mid and small cap stocks will come back, because what traders are aware of the fact that if you don't see more technical strength in the market, then all attempts of revisiting mid and small cap stocks also will get challenged. I go back to that same point which I've been making, that whatever could go wrong has gone wrong in the month of Jan and early Feb. But yet the market held on. The markets are light, the positioning is light. So little bit of good news, some flows, a technical push, I guess can really do the trick. You don't need too much of gusto. You don't need too much of, you don't need too many triggers, and you don't need too much of liquidity to make the market break out. because the positioning of the market is so light. If there is a turn in just 2 or 3 factors, I think we could really break out of the range.
And the index heavyweights, like you were talking, I mean, ITC with its 4% weightage, the year-to-date move is already 15% for both HDFC Bank, which have amongst the highest weightage on the index. It's a 3% apiece move, and similar is the case with the TCS and Infy too, surprisingly.
Yeah, so for markets to go higher, I think you will have to look at the FI-dominated stocks. The number one FI-dominated stock is HDFC and HDFC Bank, which is doing okay. Second is Bajaj Finance. Look at Bajaj Finance. I mean, we've not realized that Bajaj Finance has just added a good 4-5% in quick time. HDFC Bank has added a quick 4-5%. Reliance has added a quick 4-5%. So these are the heavyweights which really, frankly, hold the key. And if you see flows coming back into heavyweights, and if we see this kind of a pattern emerging for next couple of days, I would say that the activity in the mid and small cap space will also pick up.
Yep, and that remains to be seen. But clearly, the big talking point is the fact that now where do we go from the current levels, given that we're now just about 5% away from those 52-week high levels. Let's hear out what market experts are alluding to. Aman Chauhan, who we spoke with yesterday of Abacus Asset Manager, believes that it's the financials that will lead the way. And in this space, he likes the microfinance stocks among the lot. Listen in.
Within financials, microfinance is something that we like. This sector is coming out of the COVID worries, and it's very strong growth numbers that we have seen from all the players in this macro segment. That is something that we like. We are incrementally getting positive on auto ancillaries also. So while we don't own a direct auto stock, but we are getting into new names into auto ancillary. Railways, manufacturing, clearly there is a good headway for the next 2 to 3 years. The only issue is to get liquidity and to get stock at reasonable prices. So pharma on the fringe is looking good. The kind of companies which got impacted due to higher API prices will now, I think, start to regain. The kind of API company numbers which you are seeing where profits have declined by 30-40% clearly is going to benefit the pharma companies which use this API. So the next maybe 3-6 months, pharma can also be an interesting sector to look at. One has to be very selective. So out of the 10, say, top 10 pharma companies exporting to US or the European markets, maybe only 2 or 3 who have a strong portfolio and maybe a strong brand positioning.
Get all the global opinion this morning and all the overnight thoughts that we've seen from some of the key market men. Let me take it across to Anisha for a sum up of the same. Anisha?
Well, let me start with the word coming in from Warren Buffett. The latest holdings of the quarterly holdings of the portfolio were out yesterday. And what really surprised the street a tad bit, they have actually cut down their holdings in the Taiwan semiconductor chip maker TSMC by 86%. No wonder then that stock was reacting negatively when it comes to the Taipei market as well. So that was one important bit. And separately, if you look at the other holdings, they've cut down their positions when it comes to Activision Blizzard as well as Chevron. So where are they adding the positions? It's Apple, which continues to be the favorite stock for Warren Buffett. They've added around $3.2 billion worth of stake in Apple, and now their total stake is close to 6% at just around 5.8. But then there are words of wisdom coming in from Charlie Munger as well, his partner, wherein he says that Tesla pales in comparison to what BYD has done in China. He says that the kind of movement and momentum that we are seeing with respect to BYD in China is just ridiculous, and that's his favorite stock ever. So that's the word coming in from Charlie Munger. Crypto, he continues to be quite negative. He's calling it crypto, crappo, etc. He says that I'm not sure who's buying all of this. It's up in the air, and continues to be quite negative on it, calling it worthless, no good, crazy. harmful and antisocial. So those are the adjectives that he's using. And ChatGPT and artificial intelligence, which have been most talked about, Charlie Munger had something to say about that as well. He said that artificial intelligence is important, but there's a lot of crazy hype around it. It's not going to, cure cancer, but it's definitely going to help them to write their newsletter. So probably we should watch out for the next one on that. But shifting focus to what Kathy Wood has to say, and this is the word coming in on lithium, and this probably ties in what we have seen in the positioning of TCMC. She says that in the coming year, lithium is going to be in excess supply given the sudden, push we have seen around the countries on this, and a lot of the companies are putting in money around it in China and Korea as well. So her take is that lithium prices are going to plummet, and we'll see an oversupply in the coming years.
That's pretty interesting, Anisha. Thanks very much for giving us that perspective. Pretty interesting words Nikunj being used to describe crypto, and then of course Charlie Munger saying artificial intelligence is not going to cure cancer, but in fact it is going to get everything that we want done.
Yeah, so you say it can write a newsletter.
Yeah.
This year's Buffett newsletter, will it be written by ChatGPT?
Or Bard.
I don't know. So let's see. I mean, I've used ChatGPT, and trust me, when I've used it, I was amazed with the ability to write smoothly, the ability to connect essentially the facts and put them together in a very comprehensive manner. It's absolutely amazing. I mean, whatever 2 or 3 queries, I mean, experimental basis, which I had done, I was absolutely amazed with the kind of technology, what innovation is happening. But, Buffett and Munger, I mean, they've been absolutely right in terms of when they predicted that, Bitcoin is like rat poison. And
what words they
what
used to,
exactly, and people booed when crypto just went haywire and this entire mania got created, and everyone said, okay, these folks are getting too old to understand any technology innovation. But ultimately, what really differentiates them is their entire ability to think through trends, their ability to connect the dots and understand the importance of financial markets, where bubbles come and go, but ultimately it's the sovereign which has the command over the money. Very simple.
Absolutely. Okay, on that note, let me bring on board Naresh as well as Kunal and talk about the trade setup as well this morning. Gentlemen, hi, morning. Kunal, only 5% away actually from the 52-week high, back at 18K.
Yeah, I think it was a good comeback for the index, breaking past about the 18,000 mark. What's heartening about the markets overall is list of large cap names which are now trading at a multi-month high, as well as some of the stocks which are coming back to their 52-week highs for themselves. So I think that's that incremental sign of number of stocks increasing up higher. That's quite heartening to see. Now, 2 days back when the markets moved, we saw that strong move on the indices. We saw very good short covering on the index futures, both on the Nifty as well as on the Bank Nifty. We saw mild follow-through price action for the futures action for the index yesterday. There was a good amount of data, at least in the first half, where it indicated that the markets are going to a short covering mode. We managed to break past about the 18,000 mark. Today is the weekly expiry, and generally we've seen that there is pressure on the round strikes for the option shorters. So traders who've been shorting off 18,000 call option, at an opening of 30-40 points on the upside, there would be a pressure to unwind positions over here. So that could lead to additional rise on the indices. So maintain that bullish stance, initiated buy call yesterday, and would look to buy on dips in case if it happens today as well.
Naresh, very simple question. Is this time the market action different? We've discussed these levels in the past, but every time a Nifty has gone to 18,000, it has failed to break out of that range. Given the positioning of the market, flows, the technical position, the fact that Reliance and HDFC Bank are really on the same side of the trade, do you think this time around Nifty will do the needful and oblige and makes the bulls happy? And by end of the day or end of the week, we will have both you and Kunal smiling.
So that is the view. So today I shift Bank Nifty to a buy from a hold. So Bank Nifty is coming closer to a breakout. And if you look at a lot of Bank Nifty components, mainly HDFC Bank and ICICI Bank, are setting up for a short-term breakout move. And HDFC Bank is trying for a breakout after more than 2 years. So if that happens, it gives a fillip to the Bank Nifty itself. And then you have ICICI Bank, which has given a short-term breakout in the last few days of charts. So overall, the bias is positive, and now the momentum starts shifting up. Like I've been saying, once we start sustaining about 18,000, the momentum shifts higher, and the next target price for this move could be 18,400 to 18,600 band. So overall positive on the heavyweights. Now the only thing I would be watching out for is whether in this move we also see support coming in from the mid cap and the small cap indices, which have yet not broken out.
All right, that's the view coming in on the overall market, but let's find out some top trading recommendations then. And now, Kunal, given that we're talking about, our next targets on the index, the fact that 18K has been conquered, what's going to be your, process to really pick out stocks? Will it be purely large caps?
So you'll have to be, I would say, dependent on large cap names, few large cap stocks which are at least leading the breakouts. Then I know you probably add to the momentum list of stocks. So the two buy calls which I would initiate, one would be ICICI Bank, a stock which has...
Naresh's pick. I think this must be his pick also.
I think ICICI
That was his
Bank,
pick yesterday.
It's his pick almost every day, yeah.
So that's a stock which I would look to initiate a buy on. Targets of 900, I've revised it higher for ICICI Bank, and stop loss remains at 850. And the second would be a buy on PFC Power Finance. Again, a very interesting breakout, more of a cup and handle breakout on the daily charts, breaking past about the 145 mark. So would suggest this as a buy. 154 is a target, stop loss 142.
See, I wasn't wrong. I see it on Naresh's list as well. Naresh?
Yeah, so I stick with the two top Bank Nifty weights. So first is a buy on HDFC Bank. Now, this has been a stock which has been out of radar for a long period of time. Ever since it topped out in 2021 and then on merger date. And I think in the near term, there's a good possibility it is going to break out of all the 1700, 1720 mark. And opening up a move towards a medium-term target of 2100, 2200. In the near term, a target price of 1800. So this is a big breakout. This is the fifth attempt or the sixth attempt at that 1700 mark. And we could be in the knocking, say, today or by tomorrow itself. So stop loss at 1620 and a target price of 1800. Second is a buy on ICICI Bank. The view remains the same. Short-term breakout. An initial target price of 920 and a stop loss at 850.
Okay, consensus buy on ICICI Bank for sure, and the bias towards large caps. But Mercedes-Benz newly appointed MD and CEO Santosh Iyer had sparked a debate a few months ago when he said that SIPs are the luxury car brand's biggest competitor in the country. And now in an exclusive chat with ET Now, he clarifies on what he actually meant by that. Listen in.
What do you think is going to be 2023 like? Because is it the year where people will focus more on SIPs and savings versus EMI?
Yeah, I think post-COVID we definitely saw a bit of, we call it revenge buying kind of a phenomena. A lot of pent-up demand was also there because for the last 2 years the overall market was down. And to add to it, we also launched a couple of new products. So we definitely have seen a very big surge in 22. 23, when I look at January, the order intake has been good. So I think the demand momentum still continues. What we have been trying to do is to increase production because, in post-COVID, consumers were ready to wait for 12 months, 18 months for their car. But now in this new world, they want cars at least in 3 to 6 months time, and that's something quite critical. So our entire focus is how do we increase production, how do we now reduce this waiting period. And a higher waiting period also means lower order intake because, as I said, they need cars for some wedding in the family or some birthdays. And if we are unable to provide, then they start feeling, looking out for options, or they postpone their purchases. So the entire game for us is now how do we ramp up our production or increase availability and continue to have a good order bank. Coming to savings, I think these are cultural topics. They won't change post-COVID as fast as what we would wish to. Frankly, I was referring to the top, interesting statistics. Only 4% of US $1 million households own a luxury car in India.
Oh.
This is 60% in Europe or in China, for example. So my reference point was to the $1 million households who still don't invest on a luxury car, but they would like to invest in stock market, nothing wrong. But at some point, you reward yourself, you consume for yourself, and that was the point which, of course, got out of proportion.
Welcome back. Bracing ourselves for a muted start this Thursday morning, but let's take it then to a lot of stocks that are in the news in today's trading session. Now, to begin with, MSCI has delayed the implementation of updates in the index weighting of 2 Adani companies. So what could be the implications of this? Let's get in Somit, who joins in with those details. Somit?
Well, overnight MSCI came out with this announcement where they were saying that out of the 4 stocks where the weightage of Adani Group stocks were supposed to be reduced from March 1st, 2023. Now, of this weightage reduction of 2 of the stocks will be delayed, and they will do the next review of this on May 2023. So Adani Total, Adani Transmission, Adani Enterprises and ACC, these were the 4 stocks which were supposed to see a reduction in the weightage in the MSCI index. But now only 2 stocks will be reduced, and the 2 stocks that won't see a reduction in the weightage would be Adani Total Gas and Adani Transmission. This means that the outflows that were expected out of these 2 stocks on 1st of March won't happen now because the weightage continues to remain the same at least till May 2023. While in case of Adani Enterprises and ACC, the weightages will be reduced by around 0.3% when it comes to Adani Enterprises and 0.02% when it comes to ACC. Also, they have come out and said that this delay has been implemented because of the price limit mechanism that has been implemented on the share prices of Adani Total Gas and Adani Transmission. And they have also said that all the Adani Group stocks will also will see a special treatment for this associated securities in the MSCI equity indices starting from Feb 2023. We do not know still the exact impact of what the special treatment would be on the Adani Group stocks, but so far what we know is that the outflows that were expected in Adani Total and Adani Transmission from 1st of March won't be seen because the weightage reduction implementation has been delayed to May 2023.
Samit, we leave it at that. The Adani Group of stocks once again in focus, as would be Interglobe Aviation. The promoters of Indigo's parent company are reportedly looking to sell about 350 million worth of shares via a block deal. The floor price has been set at 1875 rupees per share, which is a 6% discount from the last traded price. Pankaj is here to tell us more about this deal.
Well, it's an interesting block deal that's coming in close to about 2,900 crore. I think it could be about $350 odd million that we are looking at. In terms of promoters, they are looking to cut down their stake. This is after what the Gangal family and the other family or the other co-promoter actually signed their deal. This is the second deal which is coming in after that. It'll be interesting to see what really happens going ahead because they still have a substantial, greater than 20-25% stake in the company. As of today, there are 3 bankers to this particular deal, so it'll be interesting to see what really happens. How it moves out. What I'm picking up is that demand is okayish to decent. However, the deal is likely to go through within the block period or about 9:16 when the markets open.
All right, thanks very much. We'll be watching out for that stock closely in trade. But the big question that we're addressing this morning and on the show primarily is whether or not the index is set to break out of the range, given the fact that yesterday we did manage to close above the 18,000 mark. It wasn't a decisive close, but we have been moving from strength to strength. Large caps along with banks have been fairly supportive. So Kunal, let's understand this concept better and walk us through what the outlook is on the Nifty's range.
Well, yes, Avan, I think it's very interesting because the stage is set for the markets now that we've broken past about the 18,000 mark after, I think, 10-12 trading sessions for the first time. And with the market breadth improving, the setup of the charts on the index is very crucial. Now, this is the charts of the index, the Nifty, and panned over the last 1.5 odd year. Now, the indicator over here, the lower end of the band is more of a trend indicator. And whenever the indicator gets into a breakout mode, we expect the Nifty to get into an upward trending mode. So look at the recent one, the one which was seen in the month of October, November, when the index was almost at 17,200 mark. From there on, we saw a very classical kind of an upward trend, something which lasted for more than 2.5 odd months, and the index managed to scale past to levels of 18,800. We go some time back in the month of June, July 2022, when the index was almost at that 15,200, 300 mark. From there, when the index, when we got the first breakout signal, that's where the index started to get into a trend. Again, this trend lasted for more than 2.5 odd months. Similar is the time band as well as the price appreciation for the indices over the historical readings. Now, why is this important? Because again, we've got a bullish indicator over here where the crossover has happened and the Nifty is just crossed that 18,000 mark. This also earmarks the breakout of this downward sloping trend line, which is more of a downward sloping trend for the index. So again, we've ended 2 important patterns. We've managed to give a breakout as well as we've confirmed a breakout of a downward sloping trend line. Now we go back to the next chart. If we manage to scale past about the 2023 high, So I've just zoomed into the recent charts for the index. This is the high for 2023 so far, 18,250 approximately. We've managed to go down 900 points. So we made a low of 17,350 approximately on the Nifty spot levels, which means it's a fall of 900 points. In technical parlance, we generally say that the fall in which the index goes into, the magnitude of the fall gets replicated on the upside. So if we manage to cross back above the 18,250 mark, the entire 900 points could probably be scaled up higher. So we would be looking at a scale of 19,000 plus levels if we happen to cross at 18,250 mark.
Okay, thanks very much. That's Kunal really breaking it down for us as to what the markets, where directionally the markets could be headed. Let's move right on then and hear it out from our fundamental guests. And Chakri Lokpriya talks about his top fundamental idea, and that's Apollo Hospitals.
I think in that space, clearly Apollo Hospital is still the leader. Still looks good. Narayana also looks good. All the elective surgeries are coming back. The occupancies are moving up. And now is the time when, and they're also expanding, all these companies, and they're also expanding into the tier 2, tier 3. And when you look at their operations, what they're doing into this tier 2, basically now they're trying to bring healthcare to where in the past they would, from people from tier 2 would travel to tier 1 for an operation. Now they're trying to reduce that inconvenience for the consumer and or rather the patient. So these stocks have also corrected. If you have, and given their annuity in their cash flow, it's a very predictable cash flow. People fall sick, get admitted, and therefore they can sustain a higher multiple and EV/EBITDA multiple, and current levels look good.
The brand which is the hallmark of luxury, a car which is the benchmark of making it big in life, a dream car for many Indians, Mercedes-Benz. Catch me, Anisha Jain, in conversation with the management of this mega MNC only on ET Now.
Yes. Okay, let's get back to the markets and the discussions. We've got Dipan Mehta joining in the show right now. Dipan, hi, good morning. Finally made it back to 18K, and I guess it was all about Reliance, right? Yesterday, the way Reliance contributed to the index move. What more does one need to see for the stock to push up further and, you know, thereby take the index up with it?
Yeah, good morning, and thank you very much for having me on your show. See, when a big weighted stock does move up, it makes the roadmap that much easier for the index to go up. And Reliance had been going sideways along with the Nifty for many months now. And I think some amount of institutional buying may have come in over there. And being an index stock, you can always expect that some index funds may have got some inflows, and that may have led to buying in Reliance Industries. But in terms of further triggers, I think clearly it's all about unlocking of the value of these subsidiaries and how that is going to actually take place, whether through IPOs or through split of the company. And that's the big question that we've been asking, because both have different ramifications for minority shareholders. A direct IPO will mean that Reliance will become a holding company, whereas a split into 3 companies would mean that minority shareholders would have direct ownership of those high value, high performing subsidiary companies. And I think it's about time that management thought about it, because there are a set of investors who want to invest in specific businesses, but don't want to invest in other businesses. For example, I may be a great fan of the retail business, but I don't want to buy the telecom or the oil to chemical business. And there is no really option for me in the listed space if I want to do that through Reliance, if I want to get into Reliance Retail for that matter. So that's the big question and trigger. Let's see how it plays out.
Okay, yes, indeed. That's something that we'll be watching out for. Dipan, let's also get in your take then on ITC. Just curious as to how you've read into the kind of performance that we've seen from this heavyweight that has managed to finally perform, and what the road ahead indicates for ITC.
See, I think ITC, perhaps we did not realize the kind of interest that the stock would generate and the expectations that the price to earnings multiple has scope to move up. We were of the view that because of the tobacco business and its various kind of negatives, the price to earnings multiple would keep on depreciating for ITC, but that did not happen. And in fact, I think the cash flow that ITC has got and the fact that it's a stable business has attracted many investors, especially at times like this when value investing is come into focus. But I think ITC perhaps has run its course. And when you take a 3 to 5 year type of view of ITC, it doesn't look all that exciting because the tobacco business will continue to grow at low single digit. And even the other businesses of ITC, they have not really scaled up to our expectation. For example, the non-tobacco FMCG business has been a great laggard compared to its peer group in terms of profitability and in terms of return on investment. And the hotel industry, hotel business, of course, has done well, but that's more because of cyclicality and recovery from the pandemic. And even in the past, it had not been such a great performer as compared to its peer group. Again, a value unlocking opportunity over here. If all the three businesses were split, then certainly minority shareholders would get a nice upswing over there. But having said that, on the whole, on a consolidated basis, you're not that optimistic on ITC. There's only so much of PE rating which can take place within the company.
Kunal, with its 4% weightage on the index and 15% year-to-date move, where does ITC head from here?
I think the stock has shown three classical moves in 2022 and 2023 so far. First was a very swift, steady as well as a swift uptrend where not too many traders could probably catch on to the stock when it started to move up from those 220 odd levels. Then came a point where the stock was at an overweighted zone, I think at 340 or 335, 350 approximately, where there was too much of expectation and traders started to get bullish. That was the time when the stock went into a consolidation. And now the stock is nearing towards the breakout of this 400 mark. So I believe that this is the classical three-step move for a stock. It goes into a strong uptrend first, which is not being caught by many traders, then consolidation, and then a continuation of move. This generally indicates that a trend is here to sustain. But what happens is that the 350 mark or the 345 odd mark, which was tested earlier, those become very strong support zone, and there is always a tendency of the stock to try and retest those supports once before a new trend starts to begin. So I would believe that ITC could be a stock which could continue to trend, but I think buying the stock at current levels may not be a fruitful risk reward play. I think waiting for that 350 odd mark as a short-term dip or a correction could be a very good opportunity to chip into the name.
Okay, that's the take coming in on ITC. Meantime, Nomura has initiated coverage in Motherson Sumi wiring with a buy stance, stating that the company is a leader in India's wiring harness segment. Let me take it across to Vamakshi, find out what the brokerage wrote reads and why is it that they're so bullish.
Well, absolutely. Like you rightly pointed out, Nomura has initiated coverage on Motherson Sumi wiring. They've given a buy rating and, in fact, a target price of 62 per share. Now, what they're highlighting is that the company is a leader in India's wiring harness segment with an estimated market share of nearly 45%. In fact, the wiring harness content in vehicles has gone up from 2.5% earlier to nearly 4.5% now, which actually drove 10% revenue CAGR that the company witnessed over the past 10 years. In fact, they're going ahead, they're expecting a stronger 15% revenue CAGR from FY23 to FY25. Apart from that, we're seeing that a rising SUV mix as well as electrification is expected to drive stronger value growth. Now, when we look at the technology expertise, it gets this from Sumitomo Wiring Solutions, which in turn is a global leader in wiring harness. Now, Sumitomo's leadership in high voltage segment in Japan is expected to in turn benefit Motherson Sumi Wiring, as it will help the company in capitalizing on the EV opportunity. EBITDA margins are also likely to improve from 10.9% currently to nearly 12.7% in FY25, led by operating leverage. Limited capex intensity should also lead to robust ROEs of nearly 46% by FY25. In fact, premiumization by large customers as well as faster EV adoption in the country could be key catalysts for the stock, is what Nomura is highlighting for Motherson Sumi Wiring. So on the back of that, they've gone ahead and initiated coverage on this stock, given a buy rating, target price of 62 per share.
The government is very keen to push the new tax regime. Is there anecdotal data which the government has which indicates that if you take the exemptions out of the total tax system, it will stop revenue leakage?
Are you trying to close all the exemptions given? No. Those exemptions will last as long as people have availed of it, as long as there are people availing of it. But it's also in the interest of all of us to have the new regime, which has been, in the sense, simplified and with reasonable tax rates, has been a recommendation of very many committees. So the new regime will have to be made attractive enough for people to move there.
Okay. All right, let's put the focus and the spotlight on stocks that are on the editor's radar. Let's start off then with Tech Mahindra, quite a mover in yesterday's trading session. And now clearly it seems that the big talking point is going to be the replacement of the CEO. And that really perhaps seems to be baked in. And Nikunj, in the past, when we've seen the other tech heavyweights like Infosys, etc., there has been a re-rating when there has been a change in top brass.
The CEO at the top matters, whether it is IT or whether it is FMCG or whether it is a bank. The challenge with Tech Mahindra is that despite being a Mahindra company, they've not really lived up to the expectation. They've had margins which are not the best in the industry, but they've got a brand which in a sense is backed by Mahindra. The markets have been debating and speculating that who's next. And that who's next is something which is right now speculative, but there are a lot of buzzwords which are there in the market, which in a sense I think is feeding to the stock price. The stock had a great 2021 but a terrible 2022. The margins are pretty much at the bottom of the barrel. We've seen change happen in Infosys when Salil Palit took over. We've seen change happen in Wipro when the new CEO took over. Could Tech Mahindra be at that cusp where there could be a change? Because change is happening as per the company's official announcement. Mr. Godani has already said by December, hopefully we will see a new management, which means the name would be announced or would be declared a couple of months ahead of that. If that is the case, then can Tech Mahindra really see a change in terms of positioning going forward? So that's the buzz in Tech Mahindra. It's a stock which should be on everyone's radar. We have no confirmation. We have no indication as to who the next CEO could be. But all I'm saying is that, is there a case for Tech Mahindra? Is there a case for anybody to revisit Tech Mahindra, given that if there is change of CEO, the operating leverage could kick in and there is a lot of scope for Tech Mahindra to improve considering where it is. You know, TCS and Infosys, you cannot improve beyond a point because their margins are so solid. These are you can only repair what is underperforming. So is there a case for Tech Mahindra to get re-rated now?
Yeah. So watch out for Tech Mahindra. That's the first stock. Moving on then, let's put the focus on Interglobe Aviation or Indigo. Now, of course, we got you that news that sources indicate that Shobha Gangwal is going to sell about 4% stake, and this is going to be the second block deal that we're seeing since the family settlement.
Look, markets know that one of the promoters has decided to exit, and gradually and slowly Mr. Gangwal's family stake is coming and hitting the market. Now, you could ask yourself, is that the reason why the stock is underperforming? Perhaps yes. I think Indigo came out with excellent set of numbers. The operating leverage for airlines has kicked in. Air traffic is also back. Air traffic is growing. We've heard from Air India how bullish they are about how things are progressively moving in the aviation sector. SpiceJet has lost market share. Akasa is too small to have a large impact in the market share per se. But the problem for Indigo has been this continuous supply. I mean, imagine there is this large supply which is continuous, closer to 1800 to 1900, and that explains that why Indigo, despite things coming up in the despite things coming up in the aviation space and the decline in SpiceJet, has not really benefited the shareholder per se, because the shareholder knows that there is a large supply which I think is going to be there, and it's going to be there for next couple of quarters.
All right, so that remains critical for Interglobe Aviation. We'll be watching out for these stocks, Aisha, on the editor's radar.
Oh yeah, absolutely. In fact, I'm going to pick up that point with Dipan as well. Dipan, given the state of airports, which almost look like bus terminals nowadays, and the kind of load factor data that we've been seeing, add to that the commentary from Air India, would you recommend buying into these dips that Interglobe is seeing, considering this is the only listed exposure one can have to aviation?
No, not really. We're not getting a very comfortable handle on the aviation space, and despite airplanes and flights going full, the kind of profitability that Indigo is reporting is certainly not that encouraging. And then there's competition coming up in form of Air India, so that's going to be a big concern area. I do understand that travel tourism is a great investment trend to play. But in my conclusion, I think it's better to buy the hotel companies. I think look at the way Indian Hotels reported, what kind of numbers they have reported, and some of these smaller hotel companies as well. And I would say that that's a better way to play this particular investment theme rather than the aviation sector. The hotel industry, there is anyway a crunch when it comes to capacity. It is not all that easy to increase hotel capacity. It takes at least 3-4 years to build new hotel rooms. So that's the way we'd like to play it. Another company which comes to mind is, of course, Mahindra Holiday, which is a vacation company, and that also has reported decent numbers last few quarters or so, very attractive valuations and a lot of cash on the books as well. So I think that's the way to play these two companies, rather this particular sector per se. Having said that, both these companies, Indian Hotels and Mahindra Holiday, we and our clients have invested in the stock.
Mahindra Holidays, Indian Hotels, the two ideas, not aviation but hotels, is the way to actually play this entire travel boom that one is seeing right now. But some more fundamental ideas. Let's hear out Sandeep Sabharwal and what he's recommending as a stock. He likes Voltas.
Just that the market was bad, they did badly. They are the market leaders, and if last 2 years sales have been bad, the probability that this summer sales will be good is very high. So I think to that extent out there, they should do well. What I saw in their result release was that they have won big orders in the electromechanical projects business, where the order book has moved up sharply to around 7,500 crores to from 5,400 crores. So I think that's a positive, and if that comes in with improved margins, it could help the company turn around. So the stock is down a lot, and if because of these results, etc., if it cools off further, I would be interested in actually buying the stock. So I'm looking at it from a perspective of looking to buy rather than turning negative now when the stock has fallen so much, although we don't own it at this point of time.
Voltas from Sandeep and Apollo Hospitals from Chakri. Here's some data dipping. As we speak, the data will just come up. To simplify the data for the benefit of our viewers, we've looked at FMCG stocks and the capital goods stocks, and we made an assumption that capital goods stocks will grow at about 15 to 18%. These capital good companies and the earnings will grow at about 15 to 18% next year, given the high base. And the P multiples are now almost nearing what the consumer stocks have commanded in the past. They've been capital goods stocks have done exceedingly well. 2 years ago, they were the talk of the town, and today they are the craze of the town. But are these stocks now the FMCG stocks now, the new FMCG stocks? Visible growth of 15-20%, but P multiples which are north of 50 times.
See, I don't think that you can paint all the capital goods companies with the same brush. Sure, I think MNC capital good companies like maybe Siemens, ABB, Honeywell, maybe trading at very, very high fancy P multiples. But the biggest capital goods company, that being Larsen & Toubro, and some of the other engineering construction companies, be it ITD Cementation or NCC or Dilip Buildcon, IRB Infra, they're not trading at FMCG type of PE multiples. And their prospects are also quite phenomenal. They're sitting on huge order book position, and they have been able to increase their operating profit margins as well, earn higher return on investment. So from that point of view, I would focus on those those capital goods companies rather than the likes of Siemens, ABB, Honeywell, and some of the other peer group MNC companies. Maybe you could add 3M also to it. These companies have always been quoted at very high P multiple, irrespective of the cycle of the capex. But if you see on a 5, 10, 15-year basis, the returns have not been all that exceptional. So FMCG has its own pace, and they also have their challenges when it comes to growth rates. I'm not too enthused about the kind of volume growth they've reported for the past several quarters. But pure-bred Indian engineering construction companies, which set up large infrastructure projects, I think that's a great focus area. And then there are niche engineering companies as well, Triveni Turbines, ISGEC, Praj Industries, and then there's the whole defense capex, kind of companies. All of those, I think, are available at reasonable valuations, and they are sitting on very good order book position. They have certain engineering strengths which help them benefit against competition. They have good export prospects as well. So I think that's the way to play the capital goods story at this point of time, and not necessarily to the MNC capital goods, the electrical engineering companies per se.
Okay, just flagging off some of yesterday's smart movers. Torrent Power, without a doubt, was one of those that made it to the list owing to a pretty strong set of numbers, and the stock really powered through in yesterday's trading session. There was also TVS Motor. Do remember the EV capital raise has kept the stock in the spotlight. According to Economic Times reports, some big PE funds as well are looking to pour in money. So wanted to get in a take then, Nuresh, on the charts. Torrent Power, after crossing that 500 mark, where do you see it headed? And TVS Motor.
So Torrent Power has been pretty sideways for the last almost 1.5 years. That has been the case with a lot of power stocks after this huge rally in 2021. So the base for the stock has been 430, 440. That was the low for the last 1.5 year. Yesterday's bounce, more important part is that the volumes are the highest since 2021. So it's almost more than a 10x volume yesterday. So that makes it a lot more convincing that the bottom is in place and a new trend is starting up. So in this case, any fading off of yesterday's move and the stock going back to the 480 mark would be a buying opportunity. And then eventually, slowly and steadily, I would expect it to go towards 550 levels. TVS Motors is a tough one given that it has outperformed all through the last 2 years in the whole auto pack. Out here, the stock is on verge of a fresh breakout above 1130 levels, which is the last swing high where it saw a spike. So the trend is positive. The risk reward is a little risky here in terms of there could be better alternative choices. But if one is holding on to the position, it's still a hold.
Okay, meantime, let's also get in a take then on Reliance Industries. Just yesterday, Kunal, you were alluding to the fact that there is a decisive breakout that's being spotted. So what is it that you're advising investors to do? Those who have bought into the stock continue to remain invested, and is it a fresh buy at the current levels as well?
Yeah, it's a fresh buy even at current levels. In fact, the day before yesterday, the open interest reduction for Reliance Industries was around 16 lakh futures, where approximately where there was reduction of open interest. Now that indicates that there was a first sign of short covering. Now yesterday's F&O data was all the more intriguing. There was almost 57 lakh unwinding of futures for Reliance Industries. So yesterday's short covering was far more prominent than day before, and that itself tells you that this breakout which you've seen for Reliance Industries over the last 2 days, a cumulative reduction of more than 72 lakhs of open interest, indicates a massive short covering which has happened for the stock, which has started for the stock. And if you happen to see maybe another couple of legs for short covering, we may probably expect the stock to swiftly move past about the 2,500 mark.
Okay. Reliance, we've discussed this time and again that how Reliance has actually really made a comeback. I'm going to shift gears and go back to a topic which Dipin and we've discussed and debated. Dipin, exactly a year ago there was a euphoria in new tech stocks. 6 weeks ago there was fear. Do you think now they've settled at realistic levels, and now more than anything else it would be earnings which will drive them?
Yeah, Nikunj, I think very good observation. See, this was the new kid on the block, and all of us were just trying to understand it better. Of course, the private equity industry has a better understanding, and they've been valuing these companies for decades. But for the first time in India, secondary market, we had such new generation companies which were making huge losses, were in investment phase, but had outstanding business models and had really changed the habits and lives of millions of people. And clearly they captured the imagination of the investors, and that's how the stock prices skyrocketed. But quarter after quarter, as we started to analyze the numbers and dig deeper, we realized that valuations were perhaps on the higher side. But now I think the street has learned to live with the losses of these companies. These managements also have got very, very strong feedback from the investors that, look, you have to get profitable earlier the better. And eventually we will start valuing you as any other ordinary brick and mortar type of a business based on revenues, profitability, return on investment. All those parameters will matter for them. And I think they're taking steps towards getting to that situation where you'll be able to value them based on their financials and not just on their number of users or the kind of orders which they have clicked and some of the other qualitative and qualitative parameters. But I think these stocks have settled down, and I think gradually they should start to move in tandem with the Sensex, Nifty, and the broader indices. And once we have a more clear roadmap to profitability and what those profits will be, I think you will see the next move up in these companies per se. But these are businesses you just cannot ignore. They are innovating all the time, and they are creating a lot of value also over the longer term. So I just like to keep them on my watch list.
Interestingly, Zomato has seen price cuts post numbers. Paytm has seen a change in terms of their outlook. I think delivery has also seen change from IFL institutional equity, and Nykaa has also seen a change in terms of the target price. So the maximum downgrades actually have come in Zomato, and they have come in delivery and Nykaa. It's interesting that how brokerages, even though their path to profitability is getting defined, brokerages have come out and actually cut their targets in some of these stocks. We'll also tell you that where the maximum upgrades have come in. I think some upgrades have definitely come in Paytm, at least from some of the foreign brokerages. Macquarie was the big one on Paytm. And fintech PB fintech, which is Policy Bazaar, has seen another one from Macquarie. So the global brokerages are slightly more sanguine in some of these stocks because they know that the global crowd typically likes high growth businesses. The understanding of some of these businesses is far more appetite and understanding is far more deeper. I like to talk about the PSU banking space, Nuresh. BOB, SBI, even for that matter Can Bank. These were strong momentum stocks. They did very well till the first 15 days of this calendar year, and now they've turned. Are those stocks getting ready for a next catch-up?
It looks like. So if we see a Bank of Baroda, it's corrected from 195 to 200 all the way down to 150 levels. Saw a good correction, now has made a recovery and now back to 170 odd levels. For the last almost 7 days, it's been in a very tight range of say 5-6 rupees. Same is the case with the Canara Bank, same is the case with the State Bank of India, which continues to be in a very tight range. So out here, once they cross the recent high, say for example a 555 for SBI, a 173 for a Bank of Baroda, for a Canara Bank it would be closer to that 300 mark. Then we could be looking at a 10% uptick going forward. But overall, the longer term trend is very clear. These three names look interesting. So SBI remains the top pick in terms of relative performance, but momentum is strong in all the three names. The rest of the smaller ones will find it tough. So I would still stick to the top three names, but SBI has the biggest upside.
Laggards yesterday at least was Unilever, and Jefferies is out with a note on their analyst meet. So let me take it across to Vinny, find out what they have to say.
So, this meet especially is highlighting the terms in for royalty, what are the changes that will be made. Let's not forget, the change for royalty that HUL will be paying Unilever has been changed from 2.65% to 3.45%. So, an 80 basis point increase which has happened. Now, in terms of this royalty change that has happened, what are the key highlights coming in? One, that, in terms of this royalty that they are paying, it is not on, anything that HUL has purchased from its own revenue. So, maybe like an Horlicks, a Boost, as well as Indulekha, all that is not included in terms of the royalty. Now, this royalty change mainly, is in two parts. One is that you will be paying a new royalty fee, as well as one is for a central service agreement as well with Unilever. So, for the royalty fees, obviously, this gives HUL the access to Unilever's portfolio purposefully in terms of trends, brands, as well as corporate logo as well. While in terms of the central services they are providing, that is something that will give them support in terms of expertise, various functions, including manufacturing as well as tools and digital marketing as well. Now, overall, the change in royalty will result to a 20 million pound income for the parent company, just an additional amount, which is very minuscule when you look at Unilever's amount. But even for HUL, it's just going to be around 2% of their profits if you compare on a yearly basis as of now. So yes, not much of a change in terms of that as well. And brand technology does not require a minority vote that they have to take normally, that is regarded as, because it's a very small percent as well. While in terms of the central service fees, they will be requiring a minority vote, which will be coming in as well.
Thanks very much, Vinny, for putting all of those details into perspective. That's the view coming in from Jefferies in the management meet, that the change in royalty will result in only a 20 million euro income from the parent. Dipan, let's get in your thoughts on what the outlook is on the defense space. With the Aero Show on in Bengaluru currently, a lot of defense companies have been showing off their prowess, and there's a lot of potential for the long term in terms of the roadmap as well that's been laid out by the government. Are you seeing some favorites here?
Yeah, I think that really defense is coming out as a separate industry group, and eventually it will just grow in size given the kind of defense requirements of the company and the export opportunity. Clearly, I think the PSU defense companies have an edge, but you need to keep in mind that there can be a great deal of volatility in their earnings because these are also capital goods companies only, and depending on order inflow and execution and deliveries, you may have revenues and profits moving up, moving down as well. But there's no denying that there's great earnings visibility over there. There is long-term consistency and visibility when it comes to revenues and profits, and that's something which we really appreciate. And if any of these companies is able to crack the export market in a significant way, then really you are getting into a blue ocean type of a scenario for these defense companies. There are some very interesting Indian defense contractors as well, which are heavily focused on technology and play a very critical role in supply of systems and software to the defense sector per se. I think those also could certainly be looked at. So, it's a sector which is growing and very positive over there. But for the time being, I think BEL, HAL, and some other shipbuilders, I think they are doing pretty well, and we'd like to remain invested in them.
Okay, Dipan, stay with us. Lots more to talk about. Let me just quickly also get you some mid-cap trading ideas going. And Kunal, let's start off with you first.
So I'll go with, in fact, most of the cement stocks are also heading towards a breakout. Ramco Cement is something which I would be bullish on, forming a classical pennant formation on the hourly charts. The breakout is just around that 738, 740 mark where the stock closed yesterday. So expecting strong up move for the entire sector as well as for the stock. Suggesting a buy with targets of 780, stop loss at 720.
Right, Naresh, what about your mid-cap strategies?
So that would be a buy on Indraprasth Gas Limited, IGL. The stock is on verge of a breakout. The stock has not done much for a long period of time compared to the rest of the market. So the stock at 430 is available at the same price as it was in, say, June of 2020. And now the stock is getting into a very sideways consolidation and a breakout move. 440 to 445 is a resistance for the last 6 months. Once that is crossed, you could get a quick move. So preempting that, a stop loss at 425 and a target price of 500.
So let's look at it. SGX has extended its gains from where it was at 8 o'clock versus where it is at 9 o'clock, and that in a sense will help the market take a leap forward. E100. Kunal, that breakout number is 8150, right?
18,250.
So another 250 points and then it's going to be
another
clear blue sky for a few days. Yeah. So would you buy the Nifty at 915?
Yeah, I would buy the Nifty. In fact, yesterday also we initiated a buy on the index. And I think when you're closer to the breakout, when the breakout has not yet happened, the risk reward is still in your favor. So 18,250 mark was the previous high, swing high for the index.
Breakout, or this time in a sense the range has been so stubborn that one should come after the decisive breakout.
No, so again, it's a valid question, but then we look at the breadth of the market, how the market has behaved. So earlier when we were at 18,200 to 50 mark, as compared to right now when we are heading towards that 18,250 mark, is the market breadth better? Are there a lot of sectors which are starting to participate? Large cap names which are starting to break out, and that list of stocks are increasing. So we discussed earlier the likes of Reliance, ICICI Bank, Bajaj Finance, IT stocks. These stocks are making a very strong comeback for themselves. Sectors are making a strong comeback for themselves. So when you have such kind of a market breadth, there is always a higher probability that the markets can not just come closer to that breakout point, but even provide the breakout and go beyond that.
Okay, let's just pause for a bit. It's almost 9:05. Several FII conferences are going to be held this week as well as next. And let's talk about what are going to be the key talking points. Pankaj joins in with all the buzz. Pankaj?
So, Aisha, after 2.5, 3 years, there are a whole host of FIIs who are traveling to India. You know, the number of people who are coming in for conferences is particularly quite high. So that's once again the buzz on the street that, you know, after 2 years or almost 2.5 years of things being online, you know, you are seeing several conferences now on the ground this week, next week. And that is one of the key reasons why you have full-fledged FIIs coming into India, meeting their mid-cap, small-cap, large-cap company, the strategist essentially that they want to. So that's something which is the focus of the street. Now, there are 2 or 3 talking points that are there. One is the slowdown in consumption. Is that prolonged? Is that temporary? That's the key talking point. Within that, should you focus on companies like, Titan, Kalyan Jewellers? These are companies that have, given you some sort of guidance or better guidance, or demand has been better than what was estimated. So the key talking point across these conferences has been, is there a slowdown in consumer durable? If there is a slowdown, it's a prolonged one or not. Within the prolonged slowdown, which can be the shining armor, most of the people believe it can be retail jewelers, and that's why focus on category like gold is something which all are talking about.
Okay, thanks very much. We'll be watching out for all those interesting conferences. Moving right on then, here are some of the other top headlines that we're tracking. And the World Bank President, David Malpass, has said that he would leave his post well before his term ends. This comes months after running afoul with the White House for failing to say whether he accepts scientific consensus on global warming. He survived multiple calls for his resignation last fall and was not expected to actually even be offered a second term. Meantime, Cisco reported better than expected fiscal second quarter results. The company lifted its forecast for the full year, and the shares of the company initially jumped in extended trading before paring most of their gains. And the death toll from the devastating earthquake in Turkey and Syria has now touched 41,000. The rescue teams in southern Turkey have said they're still hearing voices from under the rubble more than a week after the earthquake. 2 women were just pulled out from rubble in Turkey, even as hopes to find survivors from last week's devastating earthquake now seem to be dwindling. And meantime, fuel prices have touched record high in Pakistan. The country is really struggling to emerge from a financial crisis. The Prime Minister, Shahbaz Sharif, has hiked prices of petrol to a new high of Pakistan rupee 272 per litre, while diesel prices have been hiked to 280 Pakistan rupees per litre.
And Elon Musk says that he might be able to appoint his successor as Twitter CEO by the end of 2023, but first needs to stabilize his social media company. Musk took over as CEO of Twitter, remember, in October last year as part of his $44 billion acquisition of the social media firm. In December, Musk tweeted a poll asking people whether he should be stepping down as the head of Twitter, and the majority of 17.5 million voted yes. Back home, though, the polling for single phase of the Tripura Assembly election is underway amid tight security in the three-way contest. In fact, the ruling BJP and its alliance partner are pitted against the Left Congress alliance in the state. Fate of more than 250 candidates are in the fray, and the votes are going to be counted on March 2nd. Meantime, India beat West Indies by 6 wickets to notch up their second consecutive win in the Women's T20 World Cup. India chased down a target of 119 with 11 balls to spare, with wicket-keeper batter Richa Ghosh top scoring with 44 not out of 32 balls.
PSU banks, they had a lost decade, now they are back on track. If I look at the ratios for PSU banks, they have a lot to catch up if you compare them with the private sector.
There's now not just one call anywhere, not even one word anywhere saying, are you planning to recapitalize? No, banks have realized that they can stand on their feet, they can raise market monies from the market, and they realize it actually gives them a better spine with which they can stand up and speak.
Okay, let's find out what the index calls are this morning. Just about 5 minutes to go as we open up for trade. And do remember, we're looking very decisively at that 18K mark and what it means in terms of a future breakout. Kunal just a short while ago said that yes, he would buy the index at the current levels. Nuresh and Kush, though, they're saying it's a hold. And of course, that'll tilt to majorities vote. And that's a consensus call on the index. The Murometer saying hold the Nifty. But when it comes to the Nifty Bank, remember that index really proved its might yesterday, supporting with a lot of heavyweights across the board, adding their weightage to the index. And clearly that seems to be a favorable buy recommendation on the Nifty Bank index, a buy on the Nifty Bank according to the market consensus.
Also talk about some of the other buzzing names which we have currently in trade. And today, of course, while Interglobe Aviation is definitely going to be on top of our radar amidst all the news flow that Shobha Gangwal may be selling about 4% stake via block deals in the stock. Also, there's Reliance as well, which continues to be in focus given the big move that you had in the stock yesterday. Let's see whether it's going to push any further today. And then, of course, Vedanta, wherein the preferred bidder for, it's chosen as the preferred bidder for one of the bauxite blocks in Odisha. So that's going to be another stock in focus. PI Industries was a big winner yesterday after its numbers. And in the conference call, the management is indicating that they are expecting a 20% revenue growth in 23 to 24% margin bracket, and that their FY24 capex is at about 800 to 850 crore rupees. There's also, a lot of other stocks in focus. Shalby, they've got the Indonesia government nod to market and sell knee as well as hip implants. There's Patel Engineering, which is the lowest bidder for one of the projects worth about 1,567 crore rupees in Madhya Pradesh as well as Maharashtra. There's also Adani Transmission, Adani Total. The weight reduction in MSCI index has now been postponed to the May review. So change of heart in that sense from the MSCI. That may be moves that the stock could be tracking. Although in the pre-open rates, both Adani Transmission and Adani Total seem to be in the red right now. There's Dalmia Bharat as well, wherein the CCI has approved acquisition of target assets from JP Associates and its associate subsidiaries. So that's another stock which is going to be in focus today. Also on cement, the buzz seems to be that there is a proposal to cut GST rate on cement, which is not in the GST Council agenda as of now. So let's see what the cement names as well do in trade. Of course, the big buzzers yesterday beside Reliance were also Indiabulls Housing. TechM was one of your top movers on the index, held out by about 5.5%. And then, of course, there was Torrent Power reacting to its numbers, shot up a good 11%, held out very, very smartly in trade as well. And you can see some of the follow-throughs coming on some of these names. But Kunal, the top trade today continues to be Reliance, ICICI Bank.
Well, absolutely, yes. I think it's always better to stick to large cap names when the markets are heading towards a breakout, because those large cap stocks are the ones which would not just show the direction, but they would be the ones which would lead the path for the indices. And till the time the large caps show outperformance or show signs of strength, it's always high probabilistic that the index would also show strength as well as lead towards the breakout. So that's why I would probably bank on the larger cap names, both ICICI Bank as well as Reliance.
All right, we'll be keeping some of those stocks on our radar. And of course, just looking at the overall mood in the global markets, we have a pretty healthy handover coming in from Wall Street, the Asian markets as well, comfortably in the green. And this morning as well, as we step into trade, you've got the FIIs that continue to remain biased for 4 straight days. Yesterday, we managed to cling on to the 18,000 mark by the time we closed. And of course, the fact that now we're just about 5% away from those 52-week highs on the frontline index, that as well makes for a compelling argument that the index as well is only headed higher from the current levels. A lot of stocks as well that we'll be keeping on our radar. We'll be watching out as well for what the Nifty Bank Index does. You just heard out majority of our market experts on the technical side saying that at the current levels, given the kind of leadership that we've seen within the banking space, the preference is skewed towards a buy call on the Nifty Bank Index. that's really how the markets have performed this year, and it's clearly been that outperformance within the Nifty vis-a-vis the Nifty bank and vis-a-vis what we've seen in the broader markets as well. So, Aisha, let's bracing ourselves for a fairly healthy start.
Kunal, what are you gearing up to punch as first trades?
So the first stock which I would be looking to buy would be again adding on to ICICI Bank, because the stock has given a classical breakout about that 870 mark. So would wait out for a confirmation, but then I think that's a stock which I would look to add on.
Okay, Naresh, what about you? The first trades that you're getting ready to punch in as soon as the rates come out?
So continue to be bullish on gas stocks. So it is Mahanagar Gas, one, and second is IGL. That is the one I watch out for.
Okay, the first rates then on your screens, and a big move actually, nicely above the 18K mark. 18,075 is where we're currently at. A lot tempered for the Nifty Bank. Let's see what Reliance and what ICICI Bank are up to. By the way, it's a better day when it comes to the broader end of the market. I can see the small cap index holding up about almost 0.5%. So in that sense, outperforming what the benchmarks are currently doing. Reliance holds up 0.5% after that 2.25% move that it shut shop with in trade yesterday. ICICI Bank holds up 0.5%, 875 is where the stock is, and Techem as well see some follow through, holding up almost 1% as we speak right now in trade. Of course, Reliance is going to be in focus. Considering that special additional export duty on diesel has now been cut to about 2 rupees 50 paise from the earlier 750. There's also Dalmia Bharat, wherein the CCI has approved acquisition of target assets from JP Associates. There's PI Industries, a big buzzer from yesterday, continues to react smartly to its guidance. FY24 capex has been set at 800 to 850 odd crore rupees, and they're targeting a revenue growth as of 20%, and 23 to 24% is the kind of margin band that they are looking at. There's of course Adani Transmission and Adani Total as well. The weight reduction in MSCI index has now been postponed to the May review, so maybe some relief coming in there. And Interglobe Aviation, I think that block deal has happened. Shobha Gangwal was looking to sell 4% stake. But let me hand it over to Nikunj.